including Europe, including Canada, including in the States, where there's a threat now that some governors are talking about making Bitcoin mining illegal in their state if they don't clean up their act around sustainability. So this is a big, big issue.
All right. Welcome back, everybody, to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin. Millionaire investor / Shark Tank star Kevin O'Leary is at it again, bringing a major warning to Bitcoin investors. Now, some talking points that he's about to mention, I agree with. And yet there are others that I feel are very, very misinformed. Like always, we're also going to get to the latest news involving altcoins, projects making news that you should know. But we'll start with this clip. Now, I want to play you the full thing so you have the full context. And you'll see the host ask Kevin, hey, since the last time we talked, you've gotten into crypto now. Tell us about that. Kevin immediately starts listing every single issue he has with cryptocurrency. Like I said, some things I like, some things I think are very misinformed. He talks about China as well as energy consumption. Watch this, then I want to give you my thoughts.
So you're finally now playing in the crypto space. Are you using it as a hedge when it comes to inflation? Why include that in the portfolio?
Well, I am using it as a hedge. I'm considering it as property, and I think it acts that way. I mean, it is volatile. There's no question about it. There is a big problem brewing in this space because I've mentioned this a couple of times. When I disclosed that I was moving to 3% weighting, I got a mountain of calls from institutional investors saying, wait a second, where are those coins from? And I said, well, I mean, everybody knows you can tell the time of creation, but you can't tell location of creation. Because currently 60% of coins mined in Bitcoin come from China, where they don't care about sustainability and they certainly have issues around human rights. And so there are many institutional clients that do not want to own so-called blood coin from China. And as a result, we've got a really interesting situation emerging that, the actual provenance of a coin over time, one that's mined sustainably, one that's mined in a jurisdiction that supports human rights and everything else, the ethics committee's approval could be worth more than just a generic coin that can't prove its provenance. And I'm not sure when that's going to happen, but I have certainly shifted my holdings. I don't own random, ETFs with bloodcoin in them. I know the provenance of where my wallet coins were mined now, and that means I've had to take equity positions in miners. I've had to start investing in them with the covenants in place that I would like to be paid back in a royalty of a clean coin. And I'm hoping to be part of that solution. I'm trying to organize now a council of sustainability, certainly where I'll be investing in the companies that do set sustainable mandates. There's no reason a North American miner can't lead the way and take away the leadership from the Chinese who do not mine sustainably. Now, that may not matter to you, but it matters to a lot of institutions. And until everybody gets on board and stops burning coal to create electricity to mine coin, it's going to start to have a huge differentiation like oil and water. We have got to fix this industry, and we also have to go back to our politicians in various jurisdictions, including Europe, including Canada, including in the States, where there's a threat now that some governors are talking about making Bitcoin mining illegal in their state if they don't clean up their act around sustainability.
Give me your thoughts down below in the comment section. And I do want to preface by saying that I like Kevin. I do respect him as an investor, and his mindset to go green in the world, I can get behind. I love that. But Kevin, if you're watching, 2 things to realize. Number 1, I love what you're saying about going green. You will notice more and more mining firms, mining plants across the US agree with your sentiment. They are going green. Now, something to note, the majority of Bitcoins in the year 2021 have actually already pretty much been mined. Yes, the last one won't come into existence till 100 years from now, but the vast majority are already circulating. And that brings me to my second point. You have to ask yourself, for the Bitcoins that have yet to be mined, is the juice worth the squeeze? Because it's undeniable, to mine Bitcoin, that takes energy. Question is what we're getting in return worth it? Well, for the first time in human history ever, we have a digital, non-sovereign, uncensorable, undebasable store of value / money. And when you compare something like this to, let's say, the video game industry, or the Christmas lights industry that uses way more electricity than Bitcoin, it's odd that a notable investor like Kevin has remained silent about the energy consumption of video games. We mentioned something similar about Bill Maher a few days ago. Kevin, if you're watching, comment down below why you're giving video games a pass, which gives nothing to the world compared to the value of Bitcoin. Also, if you're watching, love to have you on the channel, love to have a discussion about Bitcoin. I'll keep searching for interviews like this, and I'll keep you updated. Okay, let's talk about altcoins. And keep in mind, per usual, always assume I own one or all of the coins mentioned today. The Maker Foundation, the company behind altcoin MakerDAO, is returning their dev funds to the people, to the DAO, amid path to decentralization. So essentially, the company is dissolving themselves in giving all their coins, their Maker tokens, back to the DAO. The MakerDAO Foundation has returned over 84,000 Maker tokens from its development fund to MakerDAO's governance module, and the governance is obviously controlled by the people, the token holders. And now that they've just given hundreds of millions of dollars back to the governance, does the foundation expect anything in return? In a May 3rd blog post, the foundation notes that no conditions or expectations have been placed on MakerDAO regarding the returned tokens. The announcement states that with the return of that money, along with recent upgrades and technical contributions, the foundation will now focus on working towards its own dissolution to further decentralize the protocol. Interesting. I suspect we're seeing more and more things like this is because as cryptocurrency gets more mainstream, these foundations, these companies behind the cryptocurrencies do not want to have to face regulatory scrutiny. They're saying, hey, it belongs to the people now and we can back it up. To manage and finance its transition to obsolescence, the Maker Foundation has retained less than 1% of the MKR supply, and the foundation is aiming to have dissolved by the end of this year, December 31st, 2021. They will continue to publish progress reports until the dissolution is complete. Okay, if you hodl / also maybe use MakerDAO, give me your thoughts down below in the comment section. Let's keep moving. Next piece of very, very interesting news for altcoin and also a DAO, Synthetix. Synthetix now allows users to trade top tech stocks. The DeFi platform has added FANG stocks, potentially offering APR as high as 600%. Synthetix DAO has voted to create new synthetic stocks that track the price of FANG, these leading blue chip tech stocks. Now, FANG is short for Facebook, Amazon, Apple, Netflix, and Google, and the trading platform will reward users who add liquidity to its balancer pools by paying out in SNX tokens. If you hodl Synthetix, you like this. And obviously, with traditional stocks, as opposed to cryptocurrency, that market closes at a certain time throughout the day, as opposed to cryptocurrency, that's open for trading 24/7. So the assets maintain their pegs using price data feeds generated by Chainlink oracles. At the same time, synths have an automated mechanism to stop trading when the oracle is not live, which may happen during when underlying market is closed. Give me your thoughts. Okay, next piece of news for Injective Protocol. Injective Protocol announces its first incubated project, Burnt Finance. And this is launching on the Solana blockchain. Launched on Solana in collaboration with Burnt Banksy, Burnt Finance hopes to become a truly revolutionary auction protocol for NFTs and synthetics. Interesting. So this looks like it's going to be a competitor to maybe the Nifty Gateways or the OpenSeas, only of course on a different blockchain. What is Burnt Finance? Users can take complete control of the auction with the ability to mint and trade any asset in a permissionless ecosystem. I guess what was most interesting to me on this is they are trying to solve a problem and offer something that the other competing NFT auction platforms either can't solve or won't solve. Because the problem, as they put it, is there are centralization of current auction platforms puts it out of reach for most people. There's also exorbitant minting and transaction fees, right? Most of them are on Ethereum. and prolonged transaction times. Of course, this one's on Solana, and it's aiming to be truly permissionless and give access to everybody. Give me your thoughts down below. This is a big win for Solana as a dApp platform. Solana can support up to 65,000 transactions per second with 400 ms block times. Furthermore, Solana achieves this throughput without any sharding. As I get more information, either on Injective or Solana or Burnt, I will keep you updated. All right, next piece of news on Polkadot and their upcoming parachain auctions. DeFi conglomerate Equilibrium just raised over $8.5 million to win a place on Polkadot. So phase 1 of the project reached its $250,000 DOT token hard cap. Phase 2 is looking to net the remaining 750,000 DOT required to land a parachain. So Equilibrium is one of the projects looking for that parachain. What is Equilibrium and who gave them the money? Equilibrium, which calls itself a DeFi conglomerate, includes lending, stablecoins, and swaps, and has raised the funds over 2 rounds. So $5.5 million was raised back in September, and more recently, $2.5 million was raised from investors including CMS Holdings, LD Capital, and Signum Capital. As a DOT hodler, get excited. We will have to see which projects take those coveted 100 spots by the end of the year. I will keep you updated. That is the video. Reminder for everybody in the Altcoin Daily audience, Aaron and I will be out of town / traveling Thursday, Friday, Saturday, and Sunday of this week. We'll actually be in South Carolina for all you crypto investors out there. If you see us, say hi. But how this affects you, we have lined up some interviews. We'll be releasing each day a video, or I should say a different interview every day. Look forward to that. And like always, see you tomorrow.